What happens when the engine that powered decades of growth suddenly sputters? For years, China's property sector was the beating heart of its economy, accounting for as much as 30% of GDP when related industries were included. Families poured savings into apartments, developers borrowed heavily to fuel expansion, and cities rose at lightning speed. But now, that engine is stalling. Giants like Evergrande and Country Garden have collapsed under crushing debt. Homebuyers are losing confidence. Entire ghost cities stand half-finished, and the effects are rippling across the globe. Is this just a temporary slowdown, or is China's real estate model fundamentally broken? How did we get here? China's property boom traces back to the 1990s when reforms allowed private home ownership. Developers tapped massive demand, and real estate became the go-to investment for middle-class families. Over time, however, the system grew precarious. Debt-fueled growth developers borrowed aggressively to acquire land and build at scale. Evergrande alone amassed over $300 billion in liabilities before defaulting. Speculative buying. Homes weren't just for living, they were financial assets. Families often bought multiple apartments. Confident prices would always rise. Government reliance. Local governments sold land to developers for revenue, deepening dependence on real estate sales. This cycle worked for years, but cracks began to show as debt ballooned and demand softened. The trigger: 3 red lines policy. In 2020, Beijing introduced the 3 red lines policy, aimed at curbing developer debt by imposing strict financial ratios. While intended to stabilize the market, it instead triggered a liquidity crisis. Developers suddenly couldn't roll over debts. Construction projects stalled. Homebuyers stopped paying mortgage on unfinished homes, sparking rare public protests. The policy exposed how fragile the sector truly was. The fallout: developer defaults. The most high-profile collapse was Evergrande, once China's second-largest developer. After missing bond payments in 2021, it filed for bankruptcy protection in 2023. Hot on its heels came Country Garden, once considered financially stable. Its downfall shook investor confidence even further, proving the crisis wasn't isolated. Together, these collapses wiped out billions in wealth, rattled global investors, and undermined the faith of ordinary Chinese households. The human impact behind the headlines are millions of people affected. Homebuyers. Many prepaid for apartments that remain unfinished, straining household savings and trust. Workers. The construction slowdown has cost countless jobs in real estate, cement, steel, and related industries. Families. For decades, buying property was seen as essential for securing social status and retirement. Now, younger generations are questioning whether homeownership is worth it. The crisis isn't just financial, it's social and psychological. Broader economic implications. The property slump reverberates far beyond real estate. Local government strain. Relying on land sales, local governments face shrinking revenues, limiting their ability to fund infrastructure and public services. Banking risks. Banks, heavily exposed to property loans, are grappling with rising defaults and weakened balance sheets. Consumer confidence. With so much household wealth tied up in property, falling prices make consumers reluctant to spend, dragging on growth. Global ripple effects. Commodity exporters like Australia and Brazil, relying on Chinese construction demand, feel the slowdown in iron ore, steel, and energy exports. Government response. Beijing has taken several steps to stabilize the sector. Liquidity support, easing restrictions on bank lending to developers. Buyer incentives, lowering mortgage rates and relaxing purchase restrictions in some cities. Completion focus, prioritizing finishing stalled projects to restore buyer confidence. State involvement. Some state-owned enterprises are stepping in to acquire unfinished developments. Despite these efforts, skepticism remains. Many analysts argue the government is trying to patch a system that needs fundamental reform. Structural challenges that remain. Demographics. China's population is shrinking and urbanization is slowing. With fewer young buyers, long-term demand for housing is declining. Oversupply. Some cities have far more housing than residents. ghost cities stand as stark reminders of overbuilding. Wealth imbalance. For middle-class families, property has been the primary store of wealth. Diversification into stocks, pensions, or other assets remains limited. Trust deficit. Once broken, consumer trust in pre-sales and developers is hard to rebuild. Global comparisons, China isn't the first country to face property bubbles, but the scale is unprecedented. Japan 1990s. Its property bubble burst led to a lost decade of stagnation. Many feared China could face a similar fate. U.S. 2008. America's housing crash triggered a global financial crisis, but it was rooted in subprime lending, whereas China's is tied more to oversupply and corporate debt. Spain 2009. Spain's overbuilding led to ghost towns, eerily similar to China's ghost cities. Each case shows recovery is possible, but slow, painful, and transformative. The road ahead. Experts suggest the sector must shrink to a more sustainable size. This could mean shifting focus from speculative development to affordable, livable housing, diversifying growth drivers, moving China's economy away from property dependence toward technology, manufacturing upgrades and services, financial restructuring, allowing weak developers to fail while strengthening regulation and transparency. The question is whether Beijing can manage this transition smoothly or if the process will unleash deeper economic instability. Conclusion. China's property sector was once the symbol of its rise. Now it's the source of some of its biggest challenges. The fallout is reshaping not only China's economy, but also global markets, from commodities to investment flows. What do you think? Can China's government steer the property market towards stability? Or is this crisis too big to control? Will China face a lost decade, like Japan, or chart a new path forward? Drop your thoughts in the comments, because how China handles this property challenge won't just affect its future, but the world's.